Ethereum, is it going to continue going down, or is it going to continue ranging? Are we going to see some upside really soon, or is this the end of the bull run and Ethereum is just going to go to zero? I'm going to answer all of this in this video, as well as give you the exact trade setup that I will be taking. And without any further ado, let's dive into the first one, which is the fact that we're going to look at Ethereum Bitcoin to start. And Ethereum Bitcoin, still, this blue box here is a monthly zone of demand. If we go onto the monthly chart, you can see that this is the drop, this is your base, and then that's your rally. So currently you're still accumulating within a monthly demand zone that we quite literally have not touched since March of 2021. So this is something that hasn't happened for quite literally about 3 years. And so the fact that Ethereum is spending just additional time within the zone and not breaking below the zone is actually a really good sign for Ethereum and a signal for the strength that is about to come. And even taking a look at the weekly chart, we can further refine this demand zone back into this one right here. As you can see, this is also a weekly demand zone where you have a drop, and that's your base, which is like an indecisive candle, and then boom, an aggressive move outside of that indecisive move. Currently, we have retraced back into the demand zone, and so this gives you a perfect opportunity, at least in terms of Ethereum Bitcoin, for a really high risk to reward trade for like setting your stop loss essentially at about 10%, and like Ethereum is very likely going to outperform Bitcoin by about a magnitude of 150% over the upcoming 3 months. One thing I do want you guys to remember is that when things start popping for altcoins, it can quite literally erase months or even years of downtrend in just a few weekly candles. You've seen this with, for example, ENS. Now this, by the way, is an Ethereum beta that has shown a lot of strength, and the fact that this is so strong currently is a signal for what's about to come for Ethereum. So taking a look at ENS, you had pretty much 322 days of consolidation that completely got negated by one weekly candle. 1 year of just chopping around and doing absolutely nothing, 1 week gone. So same thing for Ethereum Bitcoin. Just because it's not doing anything right now doesn't mean that it's over. If anything, one weekly candle could suddenly put us up like all the way here, and people are going to be caught off guard, and everybody that buys here can be very happy. Everyone that starts to chase price here are not going to be not so happy. So guys, patience is going to pay here, at least in terms of the big picture, until this zone gets broken, or at least until this low gets broken. Ethereum is still very much still in a generational just area, especially when it comes to buying. So do not lose sight of the big picture. Taking a look at Ethereum USD, you can also see that the overall trend is still intact. So if we go from this low to this high here, and in this low, currently we have formed kind of a higher high. So at least until this low gets broken, like overall bull market structure, at least on the very high time frame, is still intact. And the first low that would need to be broken for things to potentially change, which is a change of character, would be this low right here at 3090, which is like $3,100. If this low gets broken here, and then boom, you start forming a lower high, and then you start forming a lower low, well, guess what? That's it. The bull market's over. We're going to probably wait another 6 to 8 months before we see any sort of just pump. Now, this is not necessarily the end of the world though, because again, using this low as the parameter is the highest form of confirmation for signaling when the overall bullish uptrend is over. Because even though you will get a change of character if you do break below this area, you're not really going to get that unless you have a candle close underneath this area. Just a wick is going to be nothing serious. And if a wick does come into this area, it probably just means that it's filling in this fair value gap right here, where price expanded so quickly and so aggressively towards the upside that it left behind an imbalance. And if that imbalance gets filled by a wick and just price starts pumping like a V-shaped recovery, this is just going to end up being a wick. And so setting a stop, or like using this as the parameter for like signaling, oh, the run for Ethereum's over, is, kind of unlikely, and you should be using this low instead. So in the event that price does dip under 3K, just understand that you are dipping into not only a macro fair value gap, but you're also dipping into a macro premium discount zone, or rather not premium, but just discount zone. For example, this fair value gap happens to line up with the 0.618 and the 0.705 of this trading range from when the pump began and where we formed high. So if you do dip into this area here, like I would highly recommend just setting a limit here. In the event that it fills, great, you will be up 20% overnight. If it doesn't fill, well, you still have your capital available to buy into Ethereum. So that will be the macro just sort of play for Ethereum. I'm not saying that it's going to happen. I'm just painting out a scenario here, which is really important to understand. I am not at any given moment saying like, okay, this is going to happen. No, I'm painting out multiple scenarios so that whatever happens, you guys are prepared and you guys have a game plan for anything that happens. And this is ultimately the type of mindset that you want to adopt as a trader. Because trading, at its very purest form, is a game where you're always dealing with incomplete information and uncertainty. At any given moment right now, something could happen somewhere in the world, and it could be a black swan event, and it will go against all of the fundamental analysis, technical analysis, and boom, the market is just going to tank. There's nothing we can do about that. But that's just a state of us not knowing all the information there is in the world. What I'm trying to say here is that the only thing certain about the financial markets is that it is uncertain and anything can happen at any time, which is why you want to play the probabilities, right? Nothing's 100%, but maybe scenario A has a 60% chance of occurring and scenario B has a 30% chance of occurring. Guess what's going to happen when you take the higher probability outcome time and time again over the course of 1 year, 2 years? That's right, you tap into the power of compounding and your account's going to grow by a lot. Your skills as a trader is going to improve a lot as well. And that comes from treating everything as probabilities instead of saying hard, like, okay, price is going to do this, price is going to do that. It's more of like, okay, if this, then that, if that, then this, right? So that's scenario number one, right? In the event that you get some kind of a black swan event or some kind of liquidation event, price dipping underneath these two sell side liquidity right here, which is relatively equal, boom, when you enter into that zone underneath 3k, between 3k to about 2.8k and 2.9k, of course, then that's going to be a quite literally like a generational opportunity for Ethereum. But besides that, taking a look at the lower timeframes, you can see that currently Ethereum was forming a range between this high and this low. And recently, around mid-December, we broke underneath this range low, and we have currently been consolidating underneath the range low, which is, if you're bullish, this is not a good sign. But here's the positive thing though. Currently, this consolidation is coming into, well, what pattern traders would like to call a wedge, a triangle, a bearish, bear flag or whatever. But the key thing here, like the thing that's going to tell us even more information behind the scenes, is when you take a look at the volume profile. So when you look at the volume profile, you can see that this is considered the value area high. That's considered the value area low. And if we draw it out like this, you can see that price failed to break below the value area. This is a really good sign, because if price was indeed bearish, you break below the value area, essentially do the same thing as this range here. You break below the range, you come up, retest the previous quote-unquote support and turn it into resistance. But this did not happen on the value area, especially on the consolidation that we've had for the past 3 weeks. This is really positive. The fact that you found support at the value area low means that there is currently a pretty good likelihood that you will retest the value area high and potentially even break out of the value area high, retest the previous value area high to flip this resistance into support, which is what we want as bulls. So currently there are two plays, at least in the immediate short term. One thing to understand about the value area is that anything under the value area and anything above the value area is known as a premium, and this is a discount. This is different from the Fibonacci that I drew from here to here. That is within the range that is using a Fibonacci, but in the context of just a value area, anything under, discount, anything above, premium. Of course, it goes without saying that you ideally want to be looking to buy in a discount and you want to look to sell in a premium. And so this gives us another opportunity. In the event that Ethereum does return back to the range lows, we have a couple of levels that we can look at. First of all is, well, just the value area low at about $3,300. If you return back to this area, you have 1, 2, 3, 4 swing lows on the 4-hourly chart, which represents relatively equal lows, which presents a really big liquidity pool. So in the event that you return back to this area, you're going to sweep all the liquidity here, everyone's going to get stopped out, and that's going to provide the fuel that the market needs to break back into the range, back into the value area, to the value area high, break out of the value area high, breakout, retest, and that's going to be like scenario number one in the immediate short term. Now, scenario number two is that after sweeping all of this liquidity here, the price is going to be so volatile that it's going to just wick a little bit further to take out this liquidity point as well, which sits at around 32.20. And in the event that both of these levels get swept, then this is going to present you with a very high probability trade. So yesterday, I made a video on my exact bull market framework when it comes to buying dips. And this is something that I developed after being in the markets for 5 years and going through all the trial and error, which is coming up with a consistent dip buying strategy that works every time during the bull run. That doesn't involve me holding coins that are in the red for multiple months at a time. just to see other coins get out of the dip and start pumping. I would highly recommend you guys watch that video after this video, but just understand that as part of that framework in the dip buying opportunities, one of the mechanical setups that I give you is you want to look for a range to form after periods of high volatility, right? This is your high volatility period, and right now you're getting a consolidation. And in the event that you sweep the range lows, this is going to present one of the best buying opportunities ever, because every time you get a range low sweep after, some kind of a dip period, check it out. This is your range after dipping. The moment you sweep the range lows, that is quite literally the bottom, and the most explosive moves tend to start from there. And so once you sweep all of this liquidity, like this, by the way, also applies into that framework that I talked about, right? This is your range low, and this is your range high. So in the event, currently, again, you're breaking above the range high. Currently, you're trying to find support. So this becomes scenario number 2, where, you just buy here, place your stop loss somewhere inside the range in the hopes that this is going to be the scenario where you break out above the range and boom, right? You start pumping from here on out. In the event that this one gets stopped out though, boom, you have scenario number 3, right? Just preparing ourselves for every scenario. Scenario number 3 would be a sweep of this range low here before the explosive move begins. And so you want to place your entry here, stop loss underneath the closest wick low that you have. So this is going to be scenario number 3. And scenario number 4 is that you have a limit, a cheeky limit here, in the event that once you sweep this liquidity here and price continues to wick just a bit more aggressively, stops here, boom, you catch the bottom, place your stop loss here, and boom, Ethereum is going to begin the super huge move that it's been waiting on for quite literally 3 years. And guys, the goal of this channel is to help you guys make money as a result of watching this channel for free. It's the reason why I go in depth onto every single concept that I talk about here and explain to you why things happen the way they do, what's going on behind the scenes. I could very much just give you guys the signals and that would be it. But again, I'm trying to help you guys. And in about 2 weeks, I'm going to be hosting a free masterclass to help you guys start 2025 on the right foot. And don't worry, this is not going to be one of those quote unquote free webinars where I spend half the time trying to sell you something. If anything, is the complete opposite. What I'm going to be doing in that masterclass is giving you guys my personal top picks for the highest potential coins that will perform in 2025. I'm going to walk through the narratives and the trends that will likely emerge, continue to expand, or just fade away. I'm also going to give you guys the exact entry and exit signals that I'm looking for when it comes to the 2025 bull run. And most importantly, you guys are going to learn the exact mistakes that you shouldn't make in a bull run. This is going to be really helpful as a beginner because you don't really know what you don't know. And these are lessons that I've had to learn the hard way after being in 3 bull runs, and I hope that I can save you guys 5 years of time by having you guys attend a free masterclass for about an hour. Last time we had one of these masterclasses, we quite literally hit capacity. So we're going to limit it to just 500 people so far. Currently 80 have already signed up. So if you don't want to be too late, make sure you click the first link in the description box below. And if you happen to be part of the first 500 people that sign up, you're going to receive a little bonus to your email. It's going to be a super valuable piece of information. But anyways, thanks for watching this video, guys. I'm going to see you in the next one and hopefully in the masterclass. Ciao, ciao.